verification that there has been an incident. Obviously, you can't give us any more detail on what you're seeing from above, looking at this ship as well. But do any of your sources, Samir, tell you that they've heard anything else other than from the Iranians?
Well, right now we're waiting for a visual confirmation to come through. We're looking for anything, any imagery that will indicate any kind of smoke or anything like that. Usually it takes a few hours after the morning before we get anything like that. But we've seen that this vessel, the Sabiti, has been offline for 57 days. She kept her AIS transponder off the coast of Larak Island in the Strait of Hormuz. And this is a big problem to have these AIS transponders switch off, because if any incidents do occur, help will be very difficult to get hold of, obviously, if nothing's in the area. So we haven't seen any tugboat activity come in from the Saudi side yet. Usually they respond very quickly, and they in fact assist Iranian supertankers out of the waters whenever they need to sail back home.
Look, we've got to leave it there, but look, I really appreciate your input there, and of course people can follow your findings on Twitter as well, can't they? At Tanker Trackers, is that the right one?
Correct.
All right, Samir. Don't normally do the advert, but I think it's very interesting that people want to know more about what's going on. So thank you very much indeed. And we'll speak to you again soon, my friend. Samir Madani, who is co-founder of Tanker Trackers. It's amazing, isn't it? You get people actually looking down, and now the tanker's facing the other way. So clearly something happened. What's happened remains to be seen.
Let's wrap up the programme this morning with Raphael Patoun, Portfolio Manager for CQS New City Equity. One stock that we were talking about off-air, I just want to bring it for the audience, Yaskawa.
Yeah.
Why is this an interesting company for you? I guess it's in the robotic space in Japan.
Well, I mean, it's an interesting company because of the quality of their products, but also because it's a very interesting leading indicator for the world economy. They are really upstream in the value chain. So they actually sell product to semiconductor companies and other automotive companies. And so the signal that they sent yesterday was actually quite interesting. They slashed their guidance quite aggressively. They also mentioned that other trends have been deteriorating quite strongly over the past few weeks. So I just wanted to mention that one. It's interesting to see that today the share price is not really affected by that. So there is a certain level of optimism because people think it might be the trough actually, and that this company is very good at signaling the coming rebound that might happen at the start of next year. But look, what they said yesterday is that at least the recent data point that they have, the conversation with clients in China and also in Europe, point to a continuation of the slowdown.
Do you own this?
No, I don't.
Okay, great. Good to have you in.
Thank you very much. It was a pleasure. Thank you so much.
On the program, Raphael Patoun, Portfolio Manager for CQS New City Equity. Just before we leave you this morning, catch our episode of The Brave Ones with outgoing SAP CEO Bill McDermott tonight, 23:30 CET. Have a great weekend, everybody. From Steve, myself, the rest of the team, a very good morning to you. Be safe if you're in the markets. Bye-bye.
Anytime, any place. Watch CNBC Primetime live.
Yeah, baby! Woo!
Catch up on demand on the all-new CNBC app.
There's unbelievable technology here.
Easier than ever to find the shows you're looking for. Discover new ones.
This is amazing. Wow.
Go behind the scenes.
That's why I watch CNBC.
Plus, access to CNBC podcasts. Right now, 10-minute free preview every day. Now available in the App Store.
My name is Melissa, and I am a new mother. So my husband and I had talked about getting life insurance with the expansion of our family. The folks at Policy Genius were very helpful, and we were able to apply together. By choosing Policy Genius, we were able to compare many different policies in a very short amount of time. In addition, we were able to get all of our questions answered. They were able to kind of navigate me to the right policy. My husband and I feel very much at ease now that we know that our family is taken care of.
I got the deal of a lifetime on Poshmark. I got these barely worn Louboutin heels, and I paid $100 for them. I would have paid over $700 for these in the store.
Get $5 off your first order. Download the free Poshmark app now and use offer code LOVEPOSH.
We are the dreamers. We come in a variety of colors
and styles,
a variety of sizes.
We come in different patterns
and different materials.
We are the dreamers.
Achieving your dream can take work.
I just wanted to do a career.
But don't give up.
Changing my life.
Don't ever give up.
Ignore the haters.
They didn't believe that I can do it, and I just proved them that I can.
Independence University.
IU is an online college.
Education online for a better life offline.
So your campus is wherever you want it to be.
Take classes when you want to take classes.
At IU, you receive the tools you need at no extra cost.
Even a brand new laptop and tablet to use in school.
You're going to keep that laptop and tablet when you graduate.
And IU's career services work really hard to help you get a job.
You've got to have dreams.
Independence University.
Education online for a better life offline.
1-800-967-0542. 1-800-967-0542.
Hi, I'm Joan London with A Place for Mom. Over the years, we've helped thousands of families find senior care, and today's senior living communities have never been better, with amazing amenities like movie theaters, exercise rooms and swimming pools, public cafes, bars and bistros, even pet care services. And nobody understands your options like the advisors at A Place for Mom. These are local expert advisors that will partner with you to find the perfect place and determine the right level of care, whether that's just a helping hand or full-time memory care. Best of all, it's a free service. Call today. A Place for Mom. You know your family, we know senior living. Together, we'll make the right choice.
Call A Place for Mom right now to get our free ebook on financing senior care, as well as a free referral for senior living communities in your area. Call 1-800-536-7580. That's 1-800-536-7580.
Now get greedy whenever you want. Subscribe to the American Greed Podcast and take your greed to go.
Crime absolutely pays, and it pays a lot.
Good morning. Happy Friday. Welcome to Street Signs. I'm Joanna Versace.
And I'm Juliana Tattlebaum. These are your headlines.
Oil prices jump as the National Iranian Oil Company says a tanker off the coast of Saudi Arabia has probably been hit by missiles, causing 2 explosions.
Trade deal optimism carries through to Europe as high-level talks get underway, while President Trump says he'll meet with Chinese Vice Premier Liu He today.
We just completed a negotiation with China. We're doing very well. We're having another one tomorrow. I'm meeting with the Vice Premier over at the White House, and I think it's going really well.
SAP shares surge as CEO Bill McDermott steps down after a decade in the role. New co-CEO Jennifer Morgan tells CNBC McDermott believes now is the right time for a change at the top.
Other than thinking about handing over the reins and kind of going through a transition at the beginning of the year, which is really our most busy and active time, setting the strategy and getting the new year in motion, he felt now was the appropriate time to come out. We had a great, strong quarter.
And Hugo Boss cuts its full-year outlook for the second time this year, putting shares on track for their worst day in more than 3 years, while Publicis also issues its second warning, sending the stock to its lowest level since July 2012. Well, a very warm welcome to Street Signs. Let's kick off with a fresh report from the IEA. They have today reduced their oil demand growth estimates for 2019 and 2020 by 100,000 barrels per day to 1 million barrels per day and 1.2 respectively. They lowered these oil demand growth estimates to reflect weaker economic forecasts. So again, reflecting that demand softness coming through. They also added that demand for OPEC crude they see falling in 2020 to 29 million barrels per day.
Also some interesting comments on the supply there, Juliana. Non-OPEC supply, I think this is interesting, led by U.S., Brazil, and Norway to rise from 1.8 million barrels per day to 2.2 million barrels per day. So interesting that we continue to see, or they continue to see, a ramp up of supply coming out of non-OPEC countries there. They've also made a few comments about the Saudi attacks. They said that the attacks put about 6% of global oil supply offline, and the largest single loss of crude volume in modern history. And say Saudi exports, their biggest customer, China, rose by 20,000 barrels per day to 1.6 million in September.
I think an interesting line as well. They said stock draws likely in Q4, even with the swift recovery of Saudi output and steady supply from the rest of OPEC. So fairly muted again again, like we've been hearing for time and time again, about the pressures of weakening demand and how that's affecting oil markets as the key driver there.
And actually, the report is called Back to Business as Usual, so we'll talk about the IEA report in a little bit more detail. But elsewhere, oil prices are also back in focus again. They've jumped following reports of an explosion on an Iranian oil tanker off the coast of Saudi Arabia. The national Iranian oil company tells NBC that the tanker was hit by 2 explosions, quote, probably by missiles, around 60 miles from Jeddah. An Iranian news agency reported that all crew members are safe and that the situation is under control. Let's get out to NBC's Ali Arouzi, who joins us live from Tehran. And Ali, the oil company is now saying that the fire has been fully put out. Do we have any more information on what exactly happened this morning?
Not a lot, and there are contrary reports about the fire. Iranians were saying it was a very small fire. It was contained immediately, and the crew of the ship, who are all okay, incidentally, were working to stabilize the situation, and they are currently saying that there is no fire on board the ship. The public relations arm of the National Iranian Oil Company said that it was hit by 2 explosions, hit the hull of the ship. They say it's probably a missile attack on the ship, which they're calling a terrorist attack, but they say they have experts on board right now trying to determine exactly what was the cause of the attack and where it came from, very importantly, in these very, very troubled times. Now, as you mentioned, it happened about 60 miles off the coast of the port city of Jeddah in the Red Sea. The Iranians also say that there was a spill into the ocean, and they are working to contain that spill to make sure there isn't any further environmental damage. But this is certainly going to spike tensions a lot further that have already been very high over the summer. We've seen all of those attacks on tankers in these very troubled waters, which John was blamed for. Now we're seeing an Iranian tanker hit. It's going to be interesting to see who the Iranians are going to blame. There's a very small pool of people they could point the finger at. It may be Saudi Arabia. It may be partly the Yemenis who work with the Saudis. So this will probably unfold over the coming hours and days, and we'll have to see how strong a reaction Iran takes to all of this. But it's certainly going to make an already very troubled region more unstable, and it's probably going to make oil prices spike a little bit. Oil prices that had settled a little bit after the Iranians and the Saudis walked back a lot of the warlike rhetoric after the attacks on the Aramco facilities. There were even some talks that the Saudis and the Iranians may have some talks, maybe not direct talks, but talks between mediators that want to see the tensions lower down. But if the Saudi Arabians are blamed for this by the Iranians, I think talks are going to be elusive and tensions are going to be very high again.
Most definitely, and that geopolitical risk premium is being reflected somewhat today, Ali, in the price of oil. Thank you for bringing us the latest from Tehran. I want to get out to Neil Atkinson now, the head of the Oil Industry and Markets Division from the IEA. Juliana and I were just going over the report, but also just this incident this morning, sir. We've been scratching our heads wondering why Brent is still trading at around $60. After the Saudi Aramco attacks, we spiked up to 70, and clearly they brought production back online quite quickly. But yet, the geopolitical risk premium is still most definitely there. We continue to see these types of attacks on vessels, on the Aramco facilities last month. Why do you think that the market is shrugging the geopolitical risk premium off so much?
Well, I think, as we say in the report that we published this morning, although the region remains extremely volatile, there's another incident this morning, and although the attacks on Saudi Arabia were extremely serious, once the initial disruption has been contained and business is as usual, as we say in our report this morning, the market looks at the fundamentals, and short of a catastrophic geopolitical incident, the oil market remains fundamentally very well supplied. There's plenty of supply coming on stream. We have very high levels of stocks. So in terms of the actual fundamentals of the market, disruptions to supply so far have been relatively limited.
Just looking at your report, I see that you still see stock draws in the fourth quarter, despite that quick recovery from Aramco. Presumably, those are stock draws from Saudi Arabia, from OPEC as a whole, obviously not from non-OPEC.
Well, no, the stocks, it's an implied stock draw because we actually see in the latter part of 2019 a surplus of demand over supply for a short period. But as we said last month in the September report, it's a temporary respite because the big increase in supply we're seeing from Brazil and Norway, and of course ongoing increases from the United States, means that in the early part of 2020 we get back to a market which is very well supplied and has been very well supplied for the whole of 2018, the whole of 2019, apart from this current period. And we get back to the fact that the oil price is likely, short of a major geopolitical incident, to remain under pressure for some time to come.
Now, Neil, let's talk about the demand side here. Today in this report, you've cut your 2019 and 2020 oil demand growth forecasts. Give us a little bit of color around what's driven this reduction. I know part of it is technical, but how much of this is driven by the trade war that's ongoing?
Well, a large part of the 2019 reduction, as we explained in the report, is technical. But yes, of course, to some extent, it also reflects the fact that trade tensions are visibly impacting on global trade. And of course, the broader economic mood music is not as nice as it has been previously. So we made a very modest reduction in our 2019 growth number. Looking into 2020, we looked at the latest OECD GDP outlook that was published a couple of weeks ago, and it does look as if they're expecting weaker growth in 2020. So reflecting that and reflecting ongoing tensions over trade, we've again made a small reduction in our growth outlook for 2020. But that growth still remains 1.2 million barrels a day, so that for the moment remains fairly robust. But of course, we'll have to see how the economic news plays out and whether or not there's any progress on the trade talks.
What kind of upside are we talking about here? If we do see significant progress on the trade talks, are we going to see oil markets bounce really significantly if we see some concrete steps forward here?
Well, we can't speculate on how much oil prices might move up or down depending on specific events. All we have to watch is news from the trade talks. Will the mood music be more positive? Will other economic concerns, such as any impact there might be from Brexit, if that happens, and wider concerns about the struggling economies or the weaker economic news in, for example, Germany. There's an awful lot of factors to take into account here. And for the time being, it's difficult to know what the picture will look like. For the time being, we stick with a growth number of about 1.2 million barrels a day for oil demand next year. And of course, we'll review that as real data comes in and as the picture gets clearer. But something we should bear in mind here about oil prices is that today's prices, even with the small bounce we've seen this morning after the latest incident, they're trading at roughly 25 to 30% below the levels we saw last year. And that is a major benefit to consumers around the world, and we shouldn't underestimate the impact of that.
Great to put today's pricing into context. Neil, thank you very much for joining us. Neil Atkinson, Head, Oil Industry and Markets Division at IEA.
And ending that conversation, talking about the possibility of progress on the trade talks. So let me talk about how markets have been reacting to that. We did have day one of those trade talks yesterday. President Trump saying we had a very, very good negotiation with China. So that gave somewhat of a boost to markets. We saw Wall Street end the day in the green. All of the three majors up about 0.6 percentage points. Apple and Caterpillar, some of the names that had the most positive impact for some of the U.S. indices there. 10 out of 11 of the S&P sectors ended positive yesterday as well. So the handover for Wall Street to Asian equities was pretty positive. We also saw that in Japanese equities overnight. Nikkei up 1.1%, Shanghai up 0.9 percentage point as well. So the handover definitely a lot more positive from Wall Street, from Asia into European markets. And you can see for the most part, the heat map in Europe is pretty positive as well. We've got the Stock 600 trading up 0.8 percentage point. So definitely on very solid footing as we get to the final day of the trading week. So that is the narrative when it comes to the trade talks. And of course, we've got day two of those talks continuing today. Some optimism that some form of a low-hanging fruit deal may be achieved. But let me take you to individual bourses. And particularly, actually, I want to start with the FTSE 100 because we may be looking at a Brexit breakthrough. We'll talk more about that later on in the show. Yesterday, we saw a big spike in the currency in the pound, trading up close to 125. Obviously, the strength of the currency impacts the FTSE 100 negatively correlated. So we are seeing the FTSE 100 dip a little bit, but a closer inspection of this basket shows that a lot of the names that have exposure to Brexit, so the home builders, a lot of the domestic banks, are trading firmly in the green today. So some of those names are trading right at the top of the FTSE 100 over there. Xetra DAX in Germany having a very strong start to the session as well, up 1.25 percentage point. One name in particular we're looking at there, S&P, the software company. The CEO is stepping down. New CEO is coming in. They've released their earnings. Very well received by the market. That stock is up about 8%, driving DAX higher. CAC 40 up about 0.5 percentage point, and the Italian index up similar amount as well. Let's talk about sectors though. And I want to start off talking about tech because clearly SAP is driving the gains in that basket, up 2.8%, a very strong start. And as I mentioned, a lot of the positivity around the trade talks is being expressed there too. Banks, good session today, up 1.8%. Here we see gains in the UK banks, as I mentioned, RBS, Barclays, right at the top of the FTSE 100. Oil and gas, because we're seeing a spike on back of the attacks on the Iranian vessels overnight. We are seeing oil and gas sector perform today, up 1.5%. And on the downside, we've got household goods, luxury, yet again struggling. One name in particular we're very focused on is Hugo Boss today, down more than double digits, down 10%. Again, very weak earnings there. Exposure to Hong Kong too, something that we've been talking about regularly on the show. And then media at the bottom, we have Publicis in France, the French media company, disappointing earnings and outlook for the year as well. So that's the whole picture for European equities, but very, very solid end to the week on this Friday morning.
Jumana, thank you very much for that market update. Very, very good negotiation. That's how President Trump described day one of the latest trade talks between U.S. and Chinese officials in Washington. The president is now scheduled to meet with Chinese Vice Premier Liu He tonight amid optimism that the two sides can reach an agreement to stave off proposed U.S. tariff hikes next week. For an update on these trade talks, Eunice filed this report from Beijing.
Vice Premier Liu He will head to the White House tonight. President Trump tweeted that he and Liu, who's leading the Chinese delegation, would have a face-to-face, raising hopes that tariffs set for next Tuesday and the trade war would be put on hold with a deal. This is what President Trump said.
We just completed a negotiation with China. We're doing very well. We're having another one tomorrow. I'm meeting with the Vice Premier over at the White House. And I think it's going really well. I will say, I think it's going really well. So we had a very, very good negotiation with China. They'll be speaking a little bit later, but they're basically wrapping it up, and we're going to see them tomorrow right here. And it's going very well.
The heads of the U.S. Chamber of Commerce and the U.S.-China Business Council, who both met with Liu overnight, said they were hopeful for so-called early harvest agreements on China's currency policy and IP rights protections. State news agency Xinhua quoted the vice premier as saying that China is willing to reach an agreement on matters that both sides care about. That optimistic tone contrasts with the overarching effort in the Chinese state press to downplay the outcome of the talks. The trade talks come at a time when the level of drama in the U.S.-China business relationship is especially high. The standoff between the NBA and its Chinese critics continues. An exhibition game Thursday between the Lakers and the Nets in Shanghai went ahead as planned, and that's despite a dispute over the league's support for a manager's tweet on Hong Kong. But criticism on Chinese social media has been fierce, with users calling the fans lackeys. And the strong turnout for the game could be a relief for the NBA that it's retaining at least part of its Chinese fan base. Eunice Yoon, CNBC Business News, Beijing.
All right, well, let's get out to Pushant, to Professor of Economics at INSEAD, who joins us now from Singapore. Professor, some very positive signals. If you take President Trump at his word, very, very good negotiation. That's how he described day one of these talks. Are you buying it? Are we likely to see some kind of deal come out at the conclusion of these talks?
I'm actually not so optimistic because we've sort of seen this play before. That there is talk of some progress, there are some minor concessions which are floated, the markets heave a sigh of relief, but then along comes a tweet or along comes and the trade talks tend to collapse. It's useful to just step back and think about how far we've come. A couple of years ago, the tariff rates that the US imposed on Chinese imports were about 3%. Today, they're close to 26%. If the Chinese go ahead with the next round of tariff escalation, which is scheduled in December 15th, the tariffs that the Chinese will impose is also on 26%. So I'm less optimistic than the markets seem to be today.
In terms of President Trump's motivation, whilst it's obviously near impossible to guess what comes next for the president, do you think it's in his political interest to keep the trade war going as he heads into his re-election campaign?
So that's a very good question. I think it's virtually impossible to separate out the politics from the economics of this. So there are two things which are happening simultaneously. The U.S. presidential elections have started. So now you have incentives for politicians to actually act tough on television, take an increasingly hawkish stance towards China. This is actually going to increase the risk of the trade war. The second thing is that we see an impeachment inquiry has been opened into President Trump, and on live television he actually asked the Chinese to investigate his political opponent, Joe Biden. Now, the Chinese have pledged to stay away from this because they see this as only risk and no reward, but these are really two big events which are sitting in the background which will interact with these trade talks in very unforeseeable ways.
Sir, you seem to be pretty negative about the prospect of a trade deal. I actually want to bring you some real evidence showing that China are beginning to buy more agricultural products. The USDA, the U.S. Department of Agriculture, is reporting large sales of soybeans and pork to China in the run-up to these trade meetings that are taking place in Washington. Do you not think that there is perhaps a limited scope for a deal that perhaps is not all-encompassing, but does hit some of the key points, like China buying more agricultural goods, perhaps some deal on the currency side of things as well?
So it's important to understand that this trade war is actually not really about China buying more soybeans and natural gas. The basic contentious issue has to do with intellectual property protection. It has to do with forced technology transfers and joint ventures. It has to do with subsidies. Now, all these issues form the core part of China's 2025 plan. Now, the U.S. has to figure out not only how it's going to tackle these really core issues, but even if they come to an agreement as to how are they going to implement it. So it's important to think about the details. Are the Americans going to use tariffs to force the Chinese to actually step away from their development strategy and actually make real changes? So there is still a massive amount of uncertainty. But at the same time, of course, we can think that, the best case scenario would be some small concessions on the part of the Chinese. Both sides sort of claim a victory and we move on. And that of course, would be a big improvement from where things stand today.
Prashantat, we'll leave it there. Thank you very much for taking the time to chat to us today on Street Science. Prashantat, the professor of economics from INSEAD. Now, rates for supertankers have surged due to lower supply of key vessels. U.S. sanctions on subsidiaries of Chinese company giant COSCO has severely reduced the amount of tankers available. Data from shipbroker Poten & Partners shows spot rates for carriers between China and the Middle East have tripled to nearly $140,000 in recent weeks.
All right, we're going to take a short break, but coming up on the show, Hugo Boss cuts its outlook as Hong Kong protests weigh on the German fashion brand.
I created Hint Water to make water taste better. We started in one grocery store.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Get ready for Brexit on the 31st of October. Find out what you need to do to prepare at gov.uk/Brexit.
At Argos, save up to 25% off furniture across thousands of lines. Our autumn-winter home and furniture collection is here. So stylish, you can wear it. With Argos, you're good to go. Offer ends the 22nd of October. Offer excludes nursery, bathroom and garden furniture. Conditions apply, subject to availability selected lines.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
You're 169 in the queue.
I proposed on the 169. She got offered the next stop.
You're my 169th greatest lover.
The number 169 never screamed going places until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487 and 50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
Carl's All Change Casserole.
So, Chloe walks in from school, tears all over her face.
Daddy,
She says,
I don't want to eat animals anymore.
I blooming love my meat, but not as much as I love my little girl. That's why we've made some changes to our old favourite, sausage casserole. Now with meat-free Cumberlands, but still with my magic touch, a dollop of mango chutney. Just as tasty as it used to be.
Better, actually.
Make your own with the new Tesco Plant Chef range. Food Love Stories. Brought to you by Tesco.
No one wants to get caught in the rain in London. We're with you. So our boilers come with 2 years interest-free credit to avoid a big chill to your wallet. You'll get a 5-year British Gas warranty. And now we can even quote by video call after work or weekends at a time that suits you. Get a quote by the 30th of November and get £150 off a new boiler or £450 off for existing home care customers. Search British Gas New Boiler. Conditions apply.
Welcome back to Street Signs. Let's dive into some of the key corporate stories taking focus this morning. SAP has rushed out third quarter preliminary results and announced Bill McDermott is stepping down as CEO with immediate effect. The enterprise software group says it is on track to offer a more streamlined service and boost profitability. McDermott's exit comes following the entry of activist investor Elliott. McDermott will be replaced by new co-CEOs Jennifer Morgan and Christian Klein. Speaking to CNBC, the pair said they would continue to follow their predecessor's growth plan.
Other than thinking about handing over the reins and kind of going through a transition at the beginning of the year, which is really our most busy and active time setting the strategy and getting the new year in motion, he felt now was the appropriate time to come out. We had a great, strong quarter. He had a very strong succession plan in place and worked closely with us to make that happen.
Jennifer and I will, of course, continue the very successful path, what Bill as the CEO already outlined. And of course, now we are heading into Q4. This is where all of our focus will now weigh in. And of course, then in the weeks to come, Jennifer and I will, of course, also share more plans about how we are heading SAP into the future.
You can catch our episode of The Brave Ones with SAP's newly departed CEO McDermott tonight at 23:30 CET. And elsewhere, Publicis has cut its full-year sales and revenue targets following a difficult third quarter. The advertising company suffered a drop in spending by U.S. clients, while its digital business also underperformed. The disappointing numbers are set to pile further pressure on CEO Arthur Sadoun, whose transformation plan appears to be taking longer than expected to yield results. And Publicis shares are trading down nearly 12% this morning.
And another company that is coming under pressure as well today, Hugo Boss, has slashed its 2019 earnings forecast yet again, while third quarter numbers missed estimates. The German fashion brand blamed weak demand in both the United States and Hong Kong. Hugo Boss said the market environment had deteriorated in North America, while its business in Hong Kong was, quote, substantially negatively affected since the start of the political unrest. It's the second time in 2 months the company has cut its earnings outlook.
It's quite an interesting update from Hugo Boss, given the strength we saw coming out of LVMH earlier this month, 11% organic sales growth there. So
a lot of polarization in the luxury sector, depending on how much exposure they have to Hong Kong. But in this case, it looks like they were also affected by the U.S. as well for Hugo Boss.
Indeed. Well, we're going to take a short break. Coming up on the show, the pressure on President Trump rises as Turkey's operation in northern Syria enters its third day. More when we return.
There's golf. And there's the golf lifestyle.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its symbols when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money. And times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply. At Argos, save up to 25% off furniture across thousands of lines. Our autumn-winter home and furniture collection is here. So stylish, you can wear it. With Argos, you're good to go. Offer ends the 22nd of October. Offer excludes nursery, bathroom and garden furniture. Conditions apply, subject to availability selected lines.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
The nights have started to draw in. And at DFS, we know that can only mean one thing. Everyone will want to spend more time at home, getting nice and cozy. Ah, you can't beat it. That's why all our sofas are handmade to order, and many are guaranteed to be delivered in time for Christmas. So you can look forward to cozying up this winter, knowing your new sofa won't let you down. DFS.
You're 169 in the queue.
I proposed on the 169. She got offered the next stop.
Oh, you're my 169th greatest lover.
The number 169 never screamed going places until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487 and 50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
Welcome to Street Signs. I'm Juliana Tattlebaum.
And I'm Jemana Versace, and these are your headlines.
Oil prices jump as the national Iranian oil company says a tanker off the coast of Saudi Arabia has probably been hit by missiles, causing 2 explosions.
Trade deal optimism carries through to Europe as high-level talks get underway, while President Trump says he'll meet with Chinese Vice Premier Liu He today.
We just completed a negotiation with China. We're doing very well. We're having another one tomorrow. I'm meeting with the Vice Premier over at the White House, and I think it's going really well.
SAP shares surge as CEO Bill McDermott steps down after a decade in the role. New co-CEO Jennifer Morgan tells CNBC McDermott believes now is the right time for a change at the top.
Other than thinking about handing over the reins and kind of going through a transition at the beginning of the year, which is really our most busy and active time setting the strategy and getting the new year in motion, he felt now was the appropriate time to come out. We had a great, strong quarter.
And Hugo Boss cuts its full-year outlook for the second time this year, putting shares on track for their worst day in more than 3 years, while Publicis also issues its second warning, sending the stock to its lowest level since July 2012.
Well, that trade deal optimism that helped to lift U.S. markets yesterday has filtered through today. Here in Europe, we're seeing strong gains across the board. In particular, in Germany, the DAX is currently leading the way higher, up about 1.4%. Yesterday, the DAX was the outperformer as well. This morning, the German index is getting a particular boost by SAP, whose shares are trading at the top of the stock 600. The change at the top coming through in the early hours this morning. But across the board, we are seeing green. President Trump offering a very strong review of how talks were going yesterday, saying very, very good negotiation. Of course, a lot remains to be seen in terms of concrete progress, but the mood is certainly upbeat so far. FTSE 100 is is the underperformer today, looking across the board here. Now it is trading in positive territory. Earlier on, we did see some losses come together for the FTSE 100, and that's come on the back of a big rally in sterling. Let's take a look at where sterling trades now versus the dollar. The big bounce that came through yesterday, and we are seeing continued gains this morning. Now sterling trading above 124 versus the dollar. That's after Leo Varadkar, the Irish Prime Minister, met with Boris Johnson and came out of that meeting striking an extremely upbeat tone relative to what we've heard so far, suggesting that he does see a pathway to a deal after that meeting. So we will get into the detail of what may have occurred during that meeting a little bit later. Euro also trading slightly higher versus the dollar, about 110. Let's take a look at U.S. futures. As I mentioned, that trade deal optimism provided some support for U.S. markets yesterday. Now it looks like we're going to see gains continue. The Dow is looking at a more than 200-point jump at the open. The Nasdaq and the S&P also looking at push higher. Don't forget as well, oil is up this morning on reports of an explosion around the Iranian tanker off the coast of Saudi Arabia. So plenty to support markets this morning. Jemana?
Absolutely. Turkey's incursion into northern Syria is entering its third day. Turkish military yesterday stepped up air and ground attacks against Kurdish militia, forcing tens of thousands of people to flee. The offensive has drawn international condemnation, while President Trump is facing growing criticism at home over his decision to withdraw U.S. troops from the region. But at a rally last night, the president once again defended the move.
We were supposed to be in Syria for 30 days. We've now been there for 10 years. We were supposed to be in Afghanistan for a short period of time. We're now going to be there for close to 19 years. It's time to bring them home. It's time to bring them home.
Well, let's get out to NBC's Bill Neely, who joins us from Erbil in Iraq. What has been the reaction on the ground from Erbil?
Yeah, good morning, Jemana. Just to bring you right up to date, the UN now says 70,000 civilians have fled, 60,000 in the first day. And I think with Turkish jets strafing residential areas and the heavy fighting reported overnight, I think it's safe to assume that those figures will just rise. And the Turkish Defense Ministry says 49 militants, as it calls them, were killed overnight, bringing the total of militants killed to 277. NBC News cannot confirm those figures. So as you can imagine, widespread shock across the region at the speed of this offensive and at the already rising death toll. Turkey, by the way, has also reported its first soldier killed. Remember, the Turkish military is one of the most powerful in NATO. The Kurds, the SDF, were only ever given small arms by the Americans, so it's overwhelming force on the part of the Turks, and I think there's little doubt that they will simply sweep through this so-called safe zone that they want to create, although it will take days and probably weeks. So President Erdogan is gaining ground. What he's not gaining is friends internationally. Almost universal condemnation of the Turkish offensive, although it has to be said the UN Security Council failed to pass any resolution asking, for example, for sanctions or demanding that the offensive should stop. And indeed, President Trump is not demanding an immediate stop to the offensive, though interestingly, a senior US State Department official did for the first time spell out, if you like, the red lines after which the US would take action. And by action, he meant financial and economic action. He said that if there was clear evidence of ethnic cleansing, and secondly, clear evidence of the indiscriminate bombing of civilian areas, then the US would take financial measures. Turkey defiantly said, if you do that, we will retaliate. But it's quite clear, actually, that we have the beginning of ethnic cleansing in that area. That's what President Erdogan wants to do. He wants to replace the Turks with Sunni Arabs from Syria, refugees who are in Turkey at the moment. So it's still unclear at what point the US might intervene, but for the moment, no sign of that. The Turkish offensive continues and is a pretty heavy one. Back to you guys.
Bill Neely, thank you very much for bringing us the latest out of Erbil there in Iraq. That was Bill Neely from NBC News.
Well, let me bring you some breaking news just hitting the wires around Renault. Now, this is according to Reuters sources that Renault board has voted in favor of ousting Thierry Bolloré as CEO. Now, this is a story that's been developing in the French press over the last couple of days. There was a report in Le Figaro that the chairman, Jean-Dominique Senard, wanted to replace the CEO. Thierry Bolloré had spoken out describing this potential attempt to replace him as a, quote, coup. And now, according to Reuters, just to reiterate, they say that the board has voted in favor of ousting him as CEO. And of course, he has come into this role after Carlos Ghosn was removed around the saga that took place kicking off last year. So we'll keep an eye and bring you any confirmation of that should it come through.
Meanwhile, let's get back to talking about the Middle East region. George Dyson, the Turkey analyst from Control Risk, joins us. And just to pick up on our colleague Bill Neely and his coverage and the latest developments in the last 24 hours, I mean, what is President Erdogan trying to achieve by going for this incursion?
So domestically, there's a lot of advantages for Erdogan in doing this. So the vast majority, or good majority of the Turkish public, even those who don't necessarily support Erdogan, will probably look fairly favorably on this move. But the majority of the Turkish public associate the SDF with the PKK, the Kurdish group in Turkey that's been fighting the Turkish state for several decades. And so they see the political presence in the north of Syria as a threat to Turkey's security.
Where is Bashar al-Assad in all of this? Because he's managed to re-control about 2/3 of Syria. The last 1/3 is roughly in the hands of these of the Kurdish groups up in the northern part of the country. What does Turkey's incursion into Syria mean for Bashar al-Assad and his relationship with the Kurds within Syria?
Well, clearly the offensive weakens the Kurdish position in Syria, and our assessment remains that Assad still intends to, if possible, assert control over all of Syria. So this means that there is potential for Assad to be able to move, Assad's or Damascus Syrian government forces to be able to move on Kurdish positions. But we have no indications of this as of yet.
And just all things being equal, then, so then you think it emboldens President Bashar al-Assad?
It has the potential to. I mean, as I should emphasize, we haven't seen anything yet, but.
And coming on to the U.S. side of things, President Trump tweeted about the options for the U.S. now and the options for how this situation unfolds from here. He remarked that he hopes that they can mediate a deal between Turkey and the Kurds. Is that realistic?
Potentially, yes. It's not unrealistic. Turkey does still rely to a fair extent on U.S. or potentially Russian support in this offensive. But we've also seen quite a discrepancy between what the U.S. says publicly and what it appears to be saying behind closed doors from the government side. So, yeah, I think it's still probably too early to say. One thing is certain, though, that Turkey is going to need support going if it wants to take this operation further.
And in terms of the other voices in the United States, I mean, you mentioned there the difference between what's being said privately and what's being said publicly. There is a group of Republican lawmakers in the U.S. who are seeking sanctions on Turkey for its offensive in Syria. Do you see sanctions coming through, and what kind of magnitude would we be looking at?
That is the big question for Turkey watchers at the moment. What sanctions are coming? If, when, how big? The bill put forward by, I think it was Senator Lindsey Graham, our assessment is, on balance, is unlikely to get the green light from the White House to go through. There are some scenarios where we could see that happening, but on balance, our assessment is less likely. What this will do, though, will probably embolden the House to pressure the White House to move forward sanctions related to Turkey's missile defense deal with Russia. the Counting Americas Adversaries Through Sanctions Act. And at some point, so the presidency has been playing for time on how to implement this. At some point, they will likely pose sanctions of some sort.
And indeed, there seems to be a wedge between what Turkey are expecting and what the international community are saying. Just now, we're getting some comments out of the Turkish foreign minister saying that he's reiterating the expectation to the NATO Secretary General that the alliance will show strong solidarity with Turkey. So their expectation is, because they are part of the NATO alliance, that they should expect to see loyalty out of NATO. But of course, the language that is coming out of their allies is remarkably different.
Absolutely. I mean, I think probably worth bearing in mind that the US public has reacted probably more negatively to this move than the Trump administration might have expected. And so I think some of this language can be explained through wanting to mitigate the fallout in public opinion from the US side. Ultimately as well, sort of NATO countries are going to want to sort of distance themselves from this, especially if there's negative press coming out around it. But what they can actually do, not so much potentially.
All right, George, thank you very much for speaking with us and running us through a very complex situation in Turkey and Syria. George Dyson, Turkey analyst from Control Risk. Now, the other big story that we've been monitoring very closely, of course, that of the trade talks between the U.S. and China. We're just getting some flashes now out of the China securities regulator saying it will scrap limits on foreign ownership of securities firms on the 1st of December and 2020, so still some time away, that's a year away. The regulator says it will scrap limits on foreign ownership of mutual fund companies on April the 1st, 2020, so spring of next year. And then it will also say limits on foreign ownership of futures companies will be scrapped as of January the 1st, 2020. So this is in line with some of the other positive signs that have been picked up by the markets over the last couple of days. And indeed, here is potentially one concession on part of the Chinese saying that they're looking to scrap some of the foreign ownership restrictions that they had previously applied on their local companies. So opening up to the rest of the world.
A fascinating development there from the China securities regulator. Well, pushing on, another story we're, of course, very closely watching here in the UK, Brexit. Sterling catapulted almost 2% higher after a positive meeting between the UK and Irish prime ministers. The pair spoke one-on-one during a walk in the grounds of an English country manor. Later in the day, Irish leader Leo Varadkar said there was sufficient progress for Brexit negotiations to resume in Brussels.
I had a very good meeting today with the Prime Minister and our teams together. Very positive and very promising. And I am now absolutely convinced that both Ireland and Britain want there to be an agreement. That's in the interests of Ireland and the United Kingdom and the European Union as a whole. And I do see a pathway towards an agreement in the coming weeks.
The newfound optimism comes ahead of a crucial week for Brexit, with the Queen's speech on Monday, a last chance EU summit on Thursday, and then Friday, that's Thursday and Friday, and then a special sitting in Parliament on Saturday. Well, Willem now joins us around the desk. Willem, what might have happened in yesterday's meeting to strike such a different tone out of Leo Varadkar?
Question I asked to both British and Irish government officials. They both say these are live negotiations. We're not going to give you details that are confidential that might disturb those negotiations. But what they both said, and particularly the Irish, is really for the first time, Leo Varadkar looked at Boris Johnson in the eyes and said, I can now trust this guy and work with this guy, despite all the months of very critical comments coming out of Downing Street, not necessarily from Mr. Johnson's mouth, but being leaked by members of his advisory group and some of his cabinet ministers as well, talking about Ireland being the problem, the Germans being an obstacle earlier this week, you remember. And yet this seemed to be a moment where these two leaders saw eye to eye and talk about now a possible path to a deal. Now, I would say very, very importantly to note timelines, because the British want to see this all done and dusted before that EU Council meeting next week. Leo Varadkar making clear that that might not be possible. He talked about this being weeks rather than days, and just talking to one of his officials just a few moments ago, talking about the idea that there's been many a slip twixt cup and lip when it comes to Brexit. We've had lots of unexpected surprises in the past. There are flocks of black swans out there, was the phrase he used.
And, you know, speaking of a black swan, actually, we're just getting some comments out of Donald Tusk, the head of the EU Council, and he says that, unfortunately, we are still in a situation in which the UK has not come forward with realistic and workable proposals. Tusk Tusk says he told the Prime Minister that if there is no such proposal by today, I will announce that there is no more chance for a deal at the summit. This has just come out now out of Donald Tusk. He says, I have received promising signals from the Irish Prime Minister after meeting Johnson yesterday that a deal is still possible, and even the slightest chance must be used. Again, he's using there's no guarantee and time is practically up. But I think that language out of Donald Tusk now, Willem, seems to really represent, the broader thinking of the EU here. And yesterday we probably fell into the trap of thinking that Varadkar was talking on behalf of the EU, but it seems that they're not fully convinced that the discussions between the two sides are enough to get them to a deal.
Everything people inside the Commission and in other European nations have said over the past few months is if the Irish are happy, we'll be happy. And the Irish will not take a position on single market that the rest of Europe is not happy with, but if the Irish are happy over other issues around that Northern Irish border, then the Europeans can make it work. In terms of next week, typically ahead of these summits, the leaders like to have everything squared away, all the fine details essentially laid out as options for them to make a political decision. And what's happening here is that's not being done, and that's why you have people like Donald Tusk, who's going to have to chair that meeting, who's going to have to steer those conversations late into the night on Thursday, not happy at the prospect that this will all be done so last minute.
All right. Well, thank you for breaking it down, Willem. A very exciting week for you, no doubt. Look forward to your coverage. That's Willem Marks reporting for us there on Brexit. Well, coming up on the show, Cleveland Fed President Loretta Meester thinks the U.S. will avoid a serious downturn. Find out why next.
There are many who are very close to me who would say,
you're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money. And times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
At Argos, save up to 25% off furniture across thousands of lines. Our autumn-winter home and furniture collection is here. So stylish, you can wear it. With Argos, you're good to go. Offer ends the 22nd of October. Offer excludes nursery, bathroom and garden furniture. Conditions apply, subject to availability, selected lines.
You're 169 in the queue.
I proposed on the 169. She got off at the next stop.
You're my 169th greatest lover.
The number 169 never screamed going places until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487.50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial